Big question to you guys. 2011 has been hot and exciting. Niren, I want to start off with you. The outlook from the West, in terms of the economy, isn't extremely bright. We're still wondering what the scenario is going to be in Europe and in America as well. What's the mood from the limited partners on India at least? What's the mood you're seeing in terms of investing in this country next year?
I think it remains kind of positive, maybe cautiously positive.
Okay.
I mean, I would think that there will be a lot more investing on the VC front. Maybe more bigger dollars in the existing companies.
Okay.
But in terms of size, I think it will increase.
Okay. Subir, what's your take? If $1 billion were invested this year, you see that amount increasing, or you think it depends on a whole number of other factors from the economy perspective?
Personally, I think what's happening with the investor base is that they're trying to figure out, is India really going to go the China way?
Okay.
And I think what the discussions we've been having with our investors has been that China has been proven to be a much more lucrative venture model.
Sure. So a lot of money is going there.
LPs, yes. Okay. Much more of, I think it's an open IPO market.
Right.
Companies scale much faster,
right,
etc. And sort of, I think one analogy someone used recently with me and an LP is saying China is basically a market where you actually have, you sort of already have a big hole, and all you got to do is fill it.
Right.
And you're done. In India, you got to dig the hole first. And then you got to fill it. So there's a lot of groundwork to be done in India, which actually is which limits fast scalability, quick exits, etc. So it's still, I think, jury's still out.
Right.
They're, like I said, Niren said, cautiously optimistic about India, but I don't think they're rushing into venture in a big way.
Alok, what are your big predictions in terms of the pace of investing and in terms of sectors for 2012?
I think internet will become broader. So I am expecting and hoping to see more services e-commerce deals come back.
Right.
That certainly seems to be one of the areas which is underinvested right now. I also think that growth capital is going to become more discerning. Many of the growth capital players have put in large chunks this year, and depending on how that experience goes, I think they could come all in, they could sidestep the market. And I think the third thing which is important for 2012 is to prove itself as a big year for exits. Most of us in the venture industry have now been around for 6 to 7 years. And what I'm hearing from limiteds is it's not enough to show that we've got one hit now. They want to start getting a sense of fund level returns. So depending on, again, the way global markets hold up, IPO markets and so on, I think it'll be interesting to see which way the exits go.
Sweet, there have been some role models in this country which is sort of generating interest for venture capitalists and for your limited partners as well, right? And we all know who the role models are. It's Flipkart, it's InMobi, it's Snapdeal. But there's also a view that all these companies are at some level losing money, right?
Yeah.
They're losing money on transactions. What are your predictions on the growth of these three pin-up boys of the Indian startup ecosystem today? Is it revenues which are inflated by costs, or is it are there companies which will become profitable moving forward?
I think on the e-commerce side, I think what's happening right now is that there's a lot of investment going into building trust.
Sure.
And I do believe that over time, as you build trust, as you mentioned earlier in the discussion, saying that it's very easy to switch from one store to the other online.
Sure.
So how do you build that trust, both from an inventory, fulfillment, returns, discounts, whatever you want to call it, to say I know what I'm getting from this
increasing loyalty
store,
as well.
And increasing loyalty.
Right.
And I think that investment is going to increase loyalty, and that it sounds very trivial, but actually there's a lot behind to do that.
Right.
Even for example, creating your own logistics boys to go deliver and collect cash.
Right.
And so I think that's happening, and I do believe that over time, as you build the loyalty, you can slowly increase your price, decrease marketing acquisition costs, and do break profits. So while I think sort of people question this whole unprofitable e-commerce model, I do believe certain companies will break out of the pack, will increase their loyalty, and actually over time will make money. Mobile technology side, I think that where it's going to end up coming down to is are you de facto plug-in to mobile publishers worldwide, and do you have enough technology stickiness in there? I think InMobi is building that.
Niren, you also have a hot company in your portfolio, which is Fashion&You and that whole group. How do you see the value playing out for Fashion&You or for these companies? Because I think they've raised enough money not to raise more money this year. But do you see the value remaining where it is, or do you see the value increasing over the next 18 months or so?
So, we are doing all these investments from a 5-year horizon.
Okay.
So we're not really looking at it from a year to year.
Sure.
What we've seen is that they are quite similar to a company called Gilt in the US, where we're also investors.
Sure.
And what we found is that in India, this could apply really well. Right? People actually are coming on to the internet and leapfrogging some levels and buying because they see a great discount. Right? And apparel is a pretty hot category. What we like about Fashion&You is that it has a significant gross margin. So the likelihood of them turning cash flow positive in the next few years is much higher.
Alok, what are your thoughts? Your thoughts on e-commerce models where the companies are potentially losing money per transaction? Do you think that's a good thing or not such a good thing? And what is Kanan's view of backing such companies? Are you saying that, hey, there will be a tipping point at some point in the near future?
I think there will be a tipping point going forward. I think with regards to the current burn that the companies are witnessing, it's important both for the company and for us as investors to distinguish between overspending and investing. So if investments are going, for example, to build the supply chain of the business, which will, yield long-term customer satisfaction and choice, that's a great investment. If it is just going towards, snatching market share from your nearest competitor and building transaction volume so you can raise the next round of capital, I think those are not great investments to have. And as soon as the growth capital market contracts, we will see some of these companies struggling to maintain momentum.
Suvir, I also wanted to go into venture capital. I think it's sort of hitting a 10-year mark in the country. So it's 2011. E-Ventures was probably before that, but broadly, most funds are sort of closing their, or at least hitting the 6th, 7th year mark of the first fundraising. I think that's fair to say. And the next 2-3 years will be a time when you have to actually close the fund and return the money to limited partners. Internally, how are you all viewing this? Because some of the companies are not necessarily close to exit at this point, right?
Yeah, I think, in my view, the venture capital really started in 2006. I think prior to that, there were 1 or 2 funds who experimented. But the real critical mass happened in 2006. And so you're on year 6 of most of the VCs. And you're absolutely right. I think you have 3 to 4 years to actually show the exits. And as Alok pointed out, I think the LPs are now trying to figure out where the fund returns for vintage 2006. And so I think the question really comes down to is now I think most investors have to start thinking of, even if I am at a point where I think I'm not ready for an IPO, is there a liquidity event that I can generate out of this portfolio?
Is it a case to go back to LP and say, hey, 10 years might not work here, give us 15?
There could be a case to say that, but then the question comes down to they are benchmarking this against global asset classes.
But they're not like
So what are you telling them then? Are you saying, listen, India is not attractive enough for you? So
that's not a good sign.
So that's not a good sign. So I think the idea really is that you can generate returns, so you're going to work harder at that. So I think you're absolutely right. You hit the nail on the head. The focus for a lot of fund managers of 2006 is and will be returns.
Alok, you've been one of the torchbearers for venture capital and you're one of the oldest funds. What are your thoughts? You have a number of companies in your portfolio. I think quite a few of them are 2006, 2007, 2008. Still positive and confident about the exits?
Oh yeah, so not just our portfolio. When we look at the 2006, 7, 8 vintage, across portfolios, other venture firms in India, we are currently tracking at least a dozen firms, which in the next 12 to 18 months could be a $500 million or more exit in gross terms. So we feel confident of where the Indian venture industry is headed, both with respect to our portfolio and our peer portfolios.
We're nearing the end of this discussion. Suvir, you guys get a whole bunch of business plans in your email inboxes every week, and if it's a Monday, you probably get the maximum number of business plans. So Suvir, what are you seeing too much of, and what do you want to see more of?
Yeah, I would say we still probably see 1 e-commerce company a day.
Still, that's Suvir's favorite thing.
And I think one of those things where I think we've taken a very cautious approach to e-commerce. We've not gone aggressive. So, at the end of the day, I think we'll continue to see more e-commerce investments coming into our mailboxes. But I'm hoping to see more of actually just more broad-based investments, not just on the internet, but even I would say technology, non-technology. I think we are seeing that. I think the broad level entrepreneur in India is now realizing there's something called venture capital. There's something called angel financing. And I can go out there and dream big and start a company.
Pradeep, you agree? Any particular sectors you want to see more of?
So obviously, e-commerce we see a lot of. I think that's going to taper down.
Hopefully they're not the same deals.
But I think what we would really like to see are entrepreneurs that have a passion to make a big impact in India. India has so many problems, but we don't see the kind of deal flow that we would expect to see in a country like India.
In terms of?
In healthcare, in education, in rural services. I think these are huge markets. That's what we would like to see more of.
Naren?
So I think, candidly, I think e-commerce 1.0 ideas and startups, right? I think very difficult to get it funded.
Now,
right now, right? So I think
So if entrepreneurs watching, no more e-commerce.
Yeah, I think no, e-commerce 1.0. Okay. Like if you got some sort of a 2.0 idea which is disruptive, we're very happy to look at that.
What's your take on the e-commerce tools industry? We're seeing a number of people.
Very interesting, right? So we're seeing logistics, we're seeing, you know, like supply chain, we're seeing, so, you know, so I think it's the picks and shovels, or it's broader internet, or, you know, it's broader kind of, you know, domestic consumption story, like, you know, healthcare, BFSI, insurance, consumer finance, stuff like that.
Alok, what are you seeing too much of, and what do you want to see more of?
You know, I think there is still too little e-commerce. I think there are several models in e-commerce that have not been explored. You know, I think more capital efficient models like marketplaces, you know, more leverage of social media, more problem solving rather than just copying what has worked elsewhere else. No, I think those are some of the themes that we are looking forward to seeing on e-commerce. I also think that the whole, you know, a telco-dependent model of value-added services over the last 4 or 5 years has proved itself to be unsuccessful. I'm hoping that 2012 will bring us more mobile investment